Hello, Pam DuBois, DMV Real Estate, DC, Maryland, and Virginia. We're always grateful that you've taken the time out to join us. Today I have with me a special friend, a friend for many, many years, Marcy McKenzie, Rock Creek Title, fellow Trini. We've been friends for so long, and I'm so excited to have her with me today. Thank you so much for being with me.
Thank you, Pam, for having me.
You're welcome. First, tell me a little bit about yourself. Tell us about yourself and how long you've been in the business.
Yeah, well, I have been in the business for over 20 years.
Yeah.
Just like you just said, we've been friends for quite a while, about the same time. I'm currently the manager of Rock Creek Title in Greenbelt, and I started as a processor. You and I were friends at that time, and
Years ago.
Yeah. I eventually moved to different title companies, and now I'm at Rock Creek Title.
Yeah. And
Yeah.
you've been there for years. So we're going to talk about the title process, what's involved with real estate processing, the back end of after a contract is given to the title company, real estate settlement attorney office, basically what happens on the back end. So first tell us a little bit about the process and what you actually do.
Yeah, well, title companies, we communicate with real estate agents. We get the title order from an agent, especially, and we start processing the file. We order title search and make sure the title is okay for the buyer, and we communicate with the lender, the real estate agent, buyer, seller, and to have the process moved along. And when it's ready to close, we notify all the parties, and we go ahead and start closing.
Okay, and what's actually involved in an actual title search of property?
Well, basically a title search is searching the public records, to find out who the record owner is, and also to find out if there are any liens against the property that we need to clear up so that the buyer can have a clear title.
Okay.
And once we determine what's on the title, we clear that up, we send a title commitment to the lender, which we'll discuss later on.
Yeah.
And the lender starts processing the loan for the buyer. Once the lender's ready, they get ready for closing. But the title searches tells you the chain of ownership, who has owned the property in the past. Make sure that all the liens that were held by previous owners are released of the public record. And once that's taken care of and we're ready to close, like I said, that's what the title search does.
And how long of a process is that normally?
For a title search, it depends on when the closing has to take place. Typically, we have like a 1 week, 2 week period.
Okay.
Sometimes, you can have a title search that the real estate agent wants to close really fast. So we can have, depending on the circumstances, we can have a title search done in a day, for instance.
Oh, you can?
Oh, yeah. Sometimes
really
a day, yeah. And sometimes you have to pay an extra fee for that.
Of course, right.
But generally it's about a week to 2 week period, right? To make sure that nothing is rushed. The abstractor takes its time so that they can find everything that they need to clear the title. But so about a week to 2.
Okay, that's pretty good. Yeah, the extra fee makes sense basically. If you're having to jump through hoops to get somebody to jump through hoops and go down to the courthouse. So basically what happens is somebody actually goes down to the courthouse and checks out the records on that property. Is that right?
Well, yes and no. Throughout the years, the process has changed because a lot of title abstractors, a lot of courthouses give you the opportunity to do the title apps being the search online.
Online.
Yeah,
oh
online.
Wow. So that really ages me way back when.
So a lot of people actually title abstractors, they sit at home or in their office and they actually do the title search from their office,
Oh wow.
If they need to go to the courthouse to get any type of documentation to support, the search, then they will do that. But some jurisdictions, some counties in Maryland, they do have you come to the courthouse to check things out. But a lot of title abstractors just stay home or at their office.
Everything is online. That's a little bit about talking about what the changes are in the industry, right? And what's going on right now, because everything is online. Years ago, I remember to go down personally and just check everything in the land records. So a little bit about, I guess, how exactly does a title search help a buyer when they're getting ready to buy a house?
Yeah, that's a good question. The title search helps the buyer because The buyer depends on, for instance, the title company to handle this for them. You know, the title company would most likely hire a title abstractor. That's the person that does the title search. So what the buyer wants to know by getting a title search done is the person who's selling the property to them the correct owner?
Right.
You know what I mean?
Makes
so
sense,
yeah, you have to make sure that the owner who's selling the property to you is the correct owner. Also, they want to make sure that the title is clear, which means that there aren't any liens that could follow them once they buy the house and move into the house.
Right,
you know, years down the road, you don't want any type of title claim. So the buyer would want to make sure that the title is clear so that they can, you know, rest assured that they're okay once they move into the house.
Give them clear title.
Yes, a clear title, no judgments or liens against the current owner that have to be taken care of. So the title search would essentially tell you any liens that need to be paid off or any title problems that can come up, and those have to get resolved before closing takes place.
Right.
Yes. Yeah.
Right, makes total sense.
Yeah.
And basically, like if they're, let's say you actually do have your contract actually has one person in, and title search has somebody else on there, like you know, your liens are. What do you do in that situation?
Yeah, what we do is we contact either the listing agent, which is the seller's agent, to tell them we have a title issue and we need supporting documentation. One particular example is the owner of the property on record at the courthouse might be deceased, okay? And the person that signed the contract is a different person, right? So we check that out and we're like, what's going on here? So we find out that the way the contract was signed, for instance, was incorrectly signed. They signed it incorrectly. They may have signed it in their individual capacity instead of like a personal representative.
Got it. Okay.
So then we contact the seller and we get more information so we can get it resolved. Yeah.
Okay.
Yeah, that's usually what happens.
Okay. And have you ever had any like past issues, basically like, you know, let's say unreleased trust, unreleased mortgages, things like that?
Yes.
That come up?
Yeah, that is very frequent. Okay. Yeah, that's why it's always good to get the title searched,
So what happens if you have a situation that you're getting ready to transfer title search comes up, there's an unreleased trust on there, and you have, I guess then you have to go back to the past title company that settled it, that transfer the title, correct?
Yeah, we can do that. We also, our title company basically likes to clear the title instead of first going back to the title company, because a lot of times what they would do is issue something called a letter of indemnity, which protects the new purchaser and the title company doing the new closing against any claims. However, we first like to try and resolve it. So if it's a lien that was recorded not too long ago, we contact that secured party. It could be like a lender.
Oh, so you go back directly to the lender?
Yes, yeah, we go directly back to the lender. Oh, we have the other title company contact that party.
Okay, because it was their job, right?
Yeah, it was their, and they also get paid for it. You know, and they also have authorization from the debtor. Right? So
previous owners.
So they will contact the secured party directly, and we like them to do that, or we will do that. And get it cleared so that we don't have to be contacted by another title company in the future.
Right. So you want it cleared before it, Yeah. What, so we talked a little bit about what's included in title report. I guess you check for everything.
Yes.
Mechanics, liens, if there's any construction, you know, if somebody was doing, you know, work on the property or something like that, and they didn't get paid, they can slap a lien on the property, which would actually show up on a title.
Yes, that shows up on the title, and all of those matters, they have to be cleared before we can close. So, like again, we always contact the secured party to make sure if they've been paid. If they have not been paid, then it has to be paid. Right? If it has been paid, then we get a release. Which is actually just a document saying it's been paid and it's filed at the courthouse.
One of the things also that shows up on title reports is if you have any kind of taxes, past taxes,
property
taxes, or past real estate, not real estate, IRS liens, or state of Maryland liens, basically.
Yeah, that's common. They do show up, and if it's against the owner of the property, then we have to get a payoff, right? We contact the IRS after we get authorization from the owner of record. and we ask them to send us a payoff statement. Now the payoff statement will say exactly how much needs to be paid in order for the lien to be released.
Right.
Because we cannot close without satisfying that debt first. So once we get the payoff, we just include it in all documents that we have been prepared all this time during the closing process. And then eventually we add it to the closing statement and we pay it off.
Okay.
Now if it's something that has been paid in the past, then we have to get a release from the IRS or whoever the secured party is at that point.
Okay. What happens, this just kind of came to my mind, what happens in a situation if there's actually more that's owed to the IRS than the actual amount that maybe the seller is going to net from the property?
Correct. Yeah, that's a really good question. It does happen. Now, what happens is we have to get something called a certificate of discharge from the IRS.
Okay.
And there's a process for that. It might be lengthy sometimes. It could take about 30 days or so.
Okay.
Yeah,
so closing back.
It could hold up closing. We get authorization from the debtor. We present an application for a certificate of discharge from the IRS. They will review a whole bunch of documents. Usually it's like an appraisal and the contract, the preliminary statement, whether it's a seller closing statement or a HUD-1.
Yeah.
Because HUD-1s are still used nowadays. Yeah, so we get that and we submit it to the IRS. Sometimes the seller would have an attorney prepared for them.
Okay.
But often we also do it on behalf of the seller. So we go ahead and we present it to the IRS with all the requirements that they need in order to process it and decide whether they're going to approve or deny it.
Okay.
I've never seen the IRS not approve it.
Oh, really?
Yeah, I've never seen it because...
Did they cut down their amount that's owed to them?
Yeah, you pay whatever proceeds the seller's getting. That's the condition. That the IRS gets that money. And we send it directly to the IRS. Yeah.
Okay.
So that's, But
so basically you really can't even sell the house until you pay, the IRS off completely.
Correct. That is if the amount, the balance due to the IRS is more than the proceeds of sale that the seller is getting. Now, if the payoff is less, then obviously we pay the IRS and the seller gets like whatever balance it is.
Whatever it is, yeah.
Correct.
That could be a sad situation, I guess, if all the money is going to go to the IRS, but they shouldn't have been there in the first place, right?
Yeah.
Yeah. So. Hey, Mark. Anyway, let's see here. Working with lenders, tell us a little bit, because as title companies in the background, basically you're working with lenders, you're working with realtors, right? You're working with everybody. Tell us a little bit about that experience.
Right. A lot of times the buyers and the sellers and the real estate agents, they're doing their work also in the background, but the title company, we have to coordinate a lot of things with the buyer, the seller, the lender, and also the title abstractor and the surveyor, the house location surveyor. We're doing a lot of coordination, right? And we make sure we get everyone together so that the final result is to come to closing, right?
Right.
Yeah, so we do a lot of background work. You're correct about that. And it's once everything comes in together, we decide we're going to close. So we do a lot of communication with the lender.
Okay. Yeah, we didn't talk about surveys. Yeah, that's also part of what you guys do on the back end. Yeah,
we do have a contract with a house location with the surveyor. They do boundary surveys, and we also do the house location survey.
Okay.
So for a regular transaction, usually it's a house location survey.
Okay.
It just shows you basically the location of the house as it relates to the property and the boundaries. It's not exact.
Yeah.
But it's just an indication of that everything's okay with the property. Yeah.
Okay. All right. So let's go into that, I guess, for a minute. What happens if there's somebody, the fence is off the line, over the line, or something like that? What do you do in that situation?
Yeah. If it's just like a little bit off, most of the time, it's okay. Those are things that happen very regularly. It's very common.
Yeah.
And what we do is we just inform the lender that there's some little encroachment. The lender doesn't really care too much about things like that, like a fence. A fence could be removed very easily. Yeah. Right? But if the house itself is encroaching on somebody else's property or vice versa, then there might be a problem, and we have to address that before we go to closing.
Right.
Now, if it's something that's pretty common in an area, for instance, in Washington, D.C., it's very common that people's houses are just slightly over the line. Yeah, especially in the row houses. And it's pretty uncommon. So we just informed all the parties. They're pretty aware of it. They just sign a document saying that they're okay. It's fine.
It's okay.
Yeah. And then we go ahead with closing.
Yeah, because it's an entire house that's over the line.
Yeah,
right?
it's just usually something by very small, a foot or two, not much, but usually it's okay.
Okay, so talk to us a little bit about title insurance, title commitments with the lender, why title insurance
is important.
Why title insurance is important.
Well, title insurance is super important because you want to protect your house, right? You spend a lot of money, buying this home. Title insurance is unlike any other type of insurance. You pay it once at closing. It's including in all your closing costs. Right. Other insurance, you pay it annually, right? But for some people or most people, this is the biggest investment of their life.
Right.
You spend $200,000, $300,000, $400,000, $1 million and up on your house, and you want to protect your ownership, right?
Right.
So what happens if someone files some kind of civil action suit against you, claiming that they have some kind of ownership interest, which happened in the past? It could be like an heir, or there could have been like a missing deed, or something was recorded incorrectly that caused a problem, and somebody else files a claim. Now, do you have a title insurance policy? You better, right? If you don't have a title insurance policy, you have to defend your ownership, right? That takes, thousands and thousands of dollars, and it could sometimes take years to defend. So the title insurance covers you for legal representation, number one, right? And also, if there's a dispute, they will handle, the title insurer would handle that for you. Okay. There's another scenario, like where, for instance, the owner, the person that sold the property to you, they may have had a line of credit. Right? The line of credit, the lenders require the owner or the borrower to sign a document saying, close out the line of credit, and you can no longer access it. We've had situations we've seen in past, or we've seen claims, not our title company, but we've we've seen claims where the previous owner had a line of credit, but it was never closed out, right? And never released, because the lender has to get that signature from the borrower, which was the seller at the time. And sometimes it's really innocent, to be honest with you. The person thinks that they still have access to that loan,
to the account,
and they go ahead and draw on that. Suppose they had a loan for $100,000. The title company paid off the $100,000 at closing. But the lien was never released.
It didn't get closed.
So the owner's thinking, oh, I can actually access this money still because it's still open. Not
but
thinking.
They know better.
Some people actually don't. You wouldn't believe it. Yeah, some people don't. So they go ahead and they take out $50,000, for instance, and they default. Or they die and the loan just goes into default. And the lender will file, a foreclosure action to foreclose on the property when the property was already sold to a buyer. And it could be years down the line, right? So you get a notice as the buyer or the owner at the time saying that the property is going to foreclosure, and you're like, what the? Right. So, if you don't have title insurance to protect you and protect your interests at that point,
situation,
you are in big trouble.
It doesn't make sense to me, and I can't understand. It's like, why would you think that you sold the property, and you can go back and access equity loan on a property that you've already closed? But, I guess people do it, and it happened a lot years ago.
It
happened a lot.
Happened, years ago. Like you said, it's less common now, but it's something that you have to take care of. The title company or whoever's doing the closing, they check the records, because you have to examine the title. If you see that it's a line of credit, or when you get the payoff, for instance, it would say that it's a line of credit. If it does not say that, you look at the title search. You look at the actual document that was recorded, the lien, and it would say it's an open-end loan, deed of trust. So you know that the person
can still do
it, still draw on the money, continuously, unless until it gets completely
closed out.
Exactly.
So that's a good example of a way to have to use the title insurance policy in something, if something comes up in that situation.
Also, other types of liens. It could be property taxes. It could be assessments. that will file against the property, or other liens that will file against any previous owner.
Yeah.
If it's still outstanding, that it was somehow missed in the title search, or just missed in general for several other reasons, they can also foreclose on the property. Some liens can also foreclose, and if you don't have title insurance, because the title insurance covers you against any type of past liens that are not yours.
It goes all the way back.
Yeah, it goes all the way back. So it's good to have it.
Yeah, it definitely makes sense. I mean, like you said, it is the most important investment that you're making. So why not protect yourself and protect it? It's a small amount to pay for something that can do so much for you in the future if needed. Yeah.
Yes.
You mentioned foreclosures. I know you guys do quite a bit of foreclosures in investment properties, right? Or investors loans, I guess. Basically.
Yes,
flipping.
We do have a lot of investor clients.
Okay.
Yeah, and we're investor friendly.
Okay, which is good.
Yeah. So we know the industry, and we know there are also rules for investors, investor closing. So we're pretty experienced in that.
Oh, okay. Yeah. Okay. Talk to me a little bit about, somebody had talked about wholesaling. Are you familiar with the wholesaling part? I guess basically signing a contract once an investor buys a property and turns around and sells the contract maybe to another investor. You guys do that?
We're familiar with that. All the parties have to be aware of it. The contracts, they must say that the contract is assignable, and everyone has to be fully aware of the transaction.
Okay.
The initial purchaser and seller, and the resulting purchaser and seller. So all parties have to be aware of it and have to agree that it's okay. And those are the rules. Okay, so
that you don't do an actual full settlement, right? You just actually, how does that actually work?
Well, what happens is, if all the parties agree that the assigner of the contract can collect an assignment fee, then that's how we handle it. If they don't agree, or some parties don't have knowledge, then we don't, we don't consider that a closing that is fully disclosed.
So I buy a property, basically. I got a property that somebody is going to actually be foreclosed upon, and I talk with that seller, write an offer on that property, and then basically get a buyer that's going to buy that property from me. So I assign this contract over to that buyer that's going to buy the property. What about the process as far as actually getting permission from the bank, let's say, because it is a property that's going to be foreclosed upon, right?
Yeah, in that case, if the loan is being paid off, right, then you don't need permission from the bank necessarily, because they're being paid off, for instance,
so it's
right? It's okay. So as long as the parties, the owner of the property and the person is being foreclosed on, are in agreement that they're okay with the contract terms, for instance, and the assignment, like I said before, it's fine. It's a transaction that we can close. So everything has to be fully disclosed, like I said.
Okay.
Now, if it's a short sale, that's another scenario.
Okay.
Yeah.
You have to get permission.
You have to get permission from the short
Makes
sale
sense.
lender, because they do require full disclosure, and so do we.
Okay.
So short sales are slightly different from a property that's being foreclosed on.
Yeah. I mean, yes, with the short sales, you can actually go ahead and assign it and wait for the lender to approve it. Now, do you actually settle on this assignment, or they just signed, I just signed off the contract over to this buyer. There's no settlement that takes place, is that right?
You mean for the first contract?
Yeah, for the
No, there's no settlement.
Okay.
You mean in terms of short sale?
No, for like the foreclosure.
Foreclosure. Yeah. The foreclosure side of it, like I said, is the lender is primarily concerned about getting paid.
Okay.
So if a property is in foreclosure, or someone is about think that their loan is going to be foreclosed on, and they believe that they want to sell the property, that's what their decision is, to sell it,
right,
then we proceed as accordingly. So they have to agree to sell it. That's what they want to do, for whatever circumstances they are in at the time. They have to agree that that's what they want to do. So it's not any situation where they're being forced to sell it or anything. it's something that, and we usually work with their agent.
Okay.
To make sure that that's what they want to do.
Okay.
Yeah.
And myself, I guess, is basically the person that's writing this contract. I've got this contract on this property. I'm going to transfer it over to this new person that's going to buy the property. Mm-hmm. No transfer and recordation fees or anything like that, right?
No, there's no double recordation taxes because once again, that first contract must say that it's assignable.
Okay.
And the parties must agree to it.
Okay.
All right?
Okay.
So, it's not like a flip transaction where I think you were trying to ask me that. I think that's what you were trying to get information on, where you have two separate contracts and no parties. The parties from the first contract and the second contract are not aware of the situation.
Right, right.
The transaction, no, that's not. We do not handle flip transactions.
Okay.
Yeah, it has to be, agreed by all parties that the contract is assignable, and the first parties have knowledge that it was transferred.
Oh, okay.
Yeah.
Okay.
To somebody else.
So we're at we've given you title search, you've done the title search, you've done the survey, you've basically done all the back end work, schedule with the lender, schedule with the real estate agents, basically everything is ready to go. What is the next step?
Well, the next step is we coordinate with all the parties that you just mentioned, make sure everyone is ready to close, because sometimes things do change. The seller or the buyer may have an emergency. But typically we coordinate with everyone, and then we agree that the time is still okay. And once that's done, the lender then sends the loan documents to the title company, and it's usually done electronically these days.
Yeah,
right?
everything, yeah.
In the old days, it used to be like send overnight by FedEx, but now everything is electronic. So they send it to the title company, the documents, and the buyer and the seller and their agents come to closing.
Okay.
So it's usually around the table, and we have the buyer's documents, which is usually pretty thick. The seller has very little documents to sign, and they sign the documents. Once the buyer has completed signing and the seller has completed signing their documents, we say congratulations. We give the buyer, usually the agent gives the buyer the keys to the house. The seller gets their funds, whether it's by a check or wire funds, and everyone's happy, and the real estate agents get paid.
Yeah, that's actually a really nice, smooth closing, right?
Yes, yeah,
very nice and smooth.
Yeah,
Are you finding that that you're getting split closings more, where the seller's coming in and signing first, and then the buyer comes in later? How are you finding that?
Yeah, we find too that, since I've been doing this for quite a while, so I find now it's common sometimes.
Yeah.
It's like maybe a 20%,
Yeah.
That sometimes someone may want to use a power of attorney, for instance, and they don't attend closing.
And they'll come,
Or the seller might be out of town or getting ready to go on vacation, and closing was delayed, so they're not able to make the closing. So they will sign the documents out of state or prior to closing, and but they send the documents to us back in time for closing, the day of closing.
Okay.
Yeah. But it's not uncommon.
Yeah. There definitely is a lot involved in the back end of what you guys do. There's definitely a lot involved. Anything else that you want to share with us? Any kind of situations that you've had recently that sticks out in your mind?
Well, the only thing I could think about is that throughout the years, we had talked about that recently, that things have changed in the industry quite a bit. The buyer now has to get 3 days in advance of closing. They have to get a copy of the closing disclosure.
Right. Yeah.
In the past, it used to be the HUD one, and they would get the HUD one maybe a day before closing. Now they have to get it 3 days in advance. And that helps the buyer take a look at it, look at the document to see if they understand things. We usually ask the buyer, do they have any questions about the closing disclosure, and the closing disclosure usually tells the buyer how much funds they need for closing.
For closing, right.
Yeah, and the buyer would send the funds to us in advance of closing so that we'd have it ready for the time that they come to the closing table. But basically, things have changed quite a bit. It's for the better. You're not running around, what I mean? Yeah, you're not running around trying to figure out when are the closing documents going to get here.
Everything is online and electronic, which is great.
Yeah, things have gotten much more secure now, you know, because they are required just to protect the privacy of the parties. So that's one of the major things that have changed. Everyone has to get their documents encrypted. Your computer, you know, has to be encrypted and protecting the buyer's information and also the seller, because we do have a lot of private information.
Right. Yeah. And with all this back work, basically the actual process itself usually takes about an hour.
The closing, it takes about an hour.
About an hour.
Yes, we do have also some seasoned buyers. You know, for instance, somebody may have bought a house in the past. Mm-hmm. One or two. This area is pretty transition area. So some people would have bought a house before and they're pretty familiar with the closing documents. Yeah. So they don't need as much time as a first-time home buyer, for instance. To read all the documents. Yeah. The first-time home buyer, they have a lot of questions. Yeah. And we usually take much more time with them and explain to them the process and all the documents, so they're pretty. You know, they feel pretty secure and confident that they know what they're doing. Yeah. So that's good. Well, we're out of time. So would you like to share your number with everybody out there so they can know how to get in touch with you? Sure. You can reach me at Rock Creek Title at 301-459-8210, extension 128, or Marcia at rockcreektitle.com, MARCIA at rockcreektitle.com. Yeah. Thanks, my Trini friend, for being here with us today. I really appreciate it. And we will see you again here next week at 1:30. Thanks for being with us. Have a great weekend, and we'll talk to you soon. Bye-bye.